In this video, I'm going to talk about trading with no regrets. Stay tuned. Hey traders, a very warm welcome to you. Okay, so trading can be full of regret. We can regret a lot of things that we do in trading, and ultimately, most of the time, it's quite a toxic emotion that we feel. And my general approach is to avoid regret as much as possible and accept that's the way it is, accept these things are going to happen, and don't try and look backwards, but look forwards. Easier said than done, but these are the kind of top 5 things that generally most traders, including myself at one point in time, and even to some point extent now, we don't eliminate regret completely, but we kind of know that, hey, this is part of the game. These are the top 5 things that generally traders will regret. If you've got any others, stick them in the comment section below. Thank you. Okay, number 1 is don't regret being stopped out. And I will add here at extremes. Okay, because this is and then the market going in your favor. So you're never going to regret being stopped out. If you stopped out on low and he stops you out and it carries on going lower, you're going to think you're the best person ever. That's what stops are for. Hey, am I great? But often it will come down, it will stop you out, then it will go in your direction, it will do what you planned it to do. The market did what you expected it to do, should I say. So don't regret that, because this is, even if you're wrong, okay, in terms of you're getting stopped out all the time, and the market's going your direction, you're gaining such useful information, because then you can adjust your trading strategy to suit this new information. If you are getting stopped and the market's going your direction, you need to adjust your entry or stop, or something needs to be tweaked. You've ultimately got a winning strategy there. Just requires a little bit of fine tuning. So, don't regret it. Of course, if you're going in too much size and it's costing you financially, you need to address that separately. You need to be doing this, if it's happening and you're adjusting your strategy and you're kind of learning and improving, you don't want to be in, completely all the chips on the table. So, especially at extremes. And also, one thing that will really tweak that regret button, guys, is that you get stopped out on the high tick of the day or the low tick of the day, or a few ticks of the low. I've lost count the amount of times that's happened to me. I've been stopped out of the high or the low. It's going to happen. Obviously, as an active day trader as well, it's going to happen more often than not. Even as a swing trader, you get stopped out of the high of the year, or the low of the year, low of the month, whatever. It's going to happen. You trade enough times, forget about where it is. All you're doing is managing the risk and learning from it. And if it happens regularly, and as I say, you're getting stopped out regularly and it's going your way, you need to adjust. If you're getting stopped out and the market is going against you all the time, you need to adjust that as well. If it's stopping you out a few times on the worst trades, it's doing its job. So, understand what part of the cog, I guess is the word to use, in the whole machine, what part of the process this plays, and adjust it and tweak it. Okay, next one. Number 2, don't regret pulling the trigger on a signal that turns out to be a loser. What do I mean by that? So you've got a strategy, you've got a setup that's working for you, or you're testing out, maybe you don't know if it's working for you at all, and it fires up a long entry or short entry. You take it and it turns out to be a losing trade. Don't regret that. The point is, you can't decide, unless it comes into your trading plan, of course, on the fly whether to take a trade or not. Maybe you do have that element of discretion. That's really a different topic altogether, and I've done a video on that previously. Go and check it out. But if you've got a signal that says, hey, I'm going to take a trade here, I'm going to do this, I'm going to do that, and it turns out to be a loser, don't regret that, because all you're doing is planting the seed of doubt that actually maybe I shouldn't take this, shouldn't take that. Again, it's all information. You're getting information about the strategy, about the setup, about everything to do with that, so that you can build on it. And if you're getting more losers than winners, and your risk reward ratio isn't adjusted to suit that, then you need to make amendments to your trading plan. So again, don't regret it. Don't say, I know how easy it is. You pull the trigger on it, it's a loser. You're like, oh, I had doubts about that. I know I shouldn't have pulled the trigger on that. But it's something to be done in the cold light of day in your trading plan. It's not something to be done on the fly. It's something to be say, okay, well, actually, why did I have doubts on this? It's because of this. Do I need to add that filter into my trading plan? Again, it all comes down to kind of sticking to what you're planning on doing. All right, number 3, guys, don't regret staying flat when things are too volatile. Hey, this is a big one for me, actually, and I still feel it from time to time. When things are really kicking off, we haven't had it for a while, but ever so often things will really kick off. And actually, you when data comes out as well, you know, you see big moves, you want to get stuck in. Maybe you're a swing trader, you want to get stuck into those really active stocks. Maybe you're a day trader who wants to get stuck in to really volatile days. And I get it, you know, you thrive on volatility. If that's a trading strategy you're using, that's where the money comes from. But ultimately, if it's too volatile, you're going to lose money because you're not going to be in tune with the ranges, the aggression, the moves, and it's too risky to get involved in it. And so don't regret that. And often you might come in and see volatility and just want to get stuck in. So there's opportunity, opportunity. Yes, volatility does equal opportunity a lot of the times, but there's got to be you've got to be approached with caution. You know, again, picking your spots carefully. Volatility allows you to pick your trades much more carefully and give you regular opportunities for another trade. That's what volatility does for you. It's not necessarily making jackpot money on each trade, although that can and does happen. But volatility gives you another chance, another chance, another chance. When it's slow, you might get one shot in the day or one shot in the week or whatever it may be for your setup. And if you miss it, it's kind of gone. So understanding that and not regretting sitting back and saying, hey, you know what, I'm just going to play a little bit defense here because I feel this is a very, very aggressive move. I can't get a grip of it. My stop's going to be too wide. Let me just wait until it dies down a bit. That's fine. That's fair. You're just playing the right move that's right for you at the time. So don't regret doing that, guys. Number 4, don't regret your position size. And what I mean by this is it's too small. You know, many people will regret and say, oh, I should have taken more size on that. I was only in a small amount. And, you know, don't regret that because, again, it's something you've planned out. And if you start adjusting position size on the fly outside of your plan, you end up doing damage because you end up going in big because you think, hey, the last 2 trades were really good for me, but I was only in relatively small size. This one, I want to swing for the fences. I want to make sure I've got a massive size in it so I'm making good money on it. And that's a trade that's going to whack you. So be careful about regretting the position size. And we all think, hey, if I'd have taken that with another, you know, a massive position size, I'd be really, really good position now financially in terms of the trading account. But just be cautious on that one, guys. Final one, I don't regret missing a move. This is the biggest one of all. FOMO is the thing that people get caught up in. It could be, you know, a stock or a sector or a new sector or a new something or a market that's just going crazy and you've kind of watched it, you thought about getting in, you didn't get in, now you regret, you feel it's too late. You don't regret it because it's going to happen. Accept that this is going to happen time and time again, even with stuff you're watching very, very actively and you're getting involved in, let alone new stuff. So just say, listen, I'm a sniper. I'm taking my shots very carefully. I'm going to miss so many moves and I expect to miss them. The occasional one I get are the ones that I'm taking my time, I'm focused, I hit it right, I wait for the setup and I get involved that way. There's so much stuff going on out there, so many things moving aggressively across all markets, across the world, across stocks. There's always something that's moving. And if you end up getting in a cycle of regretting missing some kind of move, you're going to not do yourself any favors, even if I say that's something that you're focused on, like a currency pair, a selection of stocks, something moves, you've been waiting for it, it happens, you think, oh, I should have got it. Let it go, let it move past, focus on the next trade. All right, guys, thumbs up if you like it. See you in the next one. Bye-bye.